Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Mike LoPiano. Today, we are going to be revisiting this subject of the Rainbow Road. So we're going to be talking about this particular sequence in GameStop's price cycles that typically runs from late March into early June, taking a look at some of that historically, as well as what some of our volatility and options data can tell us about what we might be expecting to show up over the next week or so. So that's coming up today. We are, of course, starting with our gratitude today. And today's gratitude once again goes out to Adam Graff, aka Go Blue, for sponsoring today's newsletter and video breakdown, as well as to our monthly contributors, Not Medical Advice, Cosmotropic, Despite 52, and Hey Lucky's, aka Faithless Looter. Thank you so much to everybody who has supported the channel, left questions, comments. All of this is super helpful for me. It helps me get some insights, some new inroads into thinking about ways that I can present or investigate new ideas. So very much thankful for that. Very much looking forward to our discussion tomorrow night, 4 p.m. Eastern time. That is after market close. We'll be having our weekly live stream. So a lot to talk about. A lot of great questions will be approaching there. So very much looking forward to that and seeing you all then. So today, right, obviously some great news, right? Yesterday we got the Bitcoin announcement, but maybe also some of this disappointing, like, wait, what the heck? Why do we have these companies, all these other companies announce things like acquiring Bitcoin, doing these equity raises? They go absolutely nuts when this is announced. On the other hand, GameStop, instead, we drop, 10, 12% on the day. So what's happening there? What's going on with respect to that in GameStop? In order to get some insight into that, right, I want to revisit this topic that I had brought up. So you'll notice this title right back from the video and the article on the 4th of April. So this was Rainbow Road, right? I had said something about this being the Rainbow Road. This, of course, is a reference to a Roaring Kitty tweet back on March 25th or March 23rd, I guess it is. March 23rd, but March 25th, something like that, in 2021, where he had this Rainbow Road tweet that he had put up. So, right, what does this? What did this mean? What did this more or less correspond to, and why does it have significance for what we're talking about this year? Well, very interestingly, right, there were some folks, I think, over on Superstonk may have pointed this out, but we did get back on, let's see, this was on April 3rd. So this was April 3rd. We got this tweet from Ryan Cohen that says, "These tariffs are turning me into a Dem." So this was this the day? I think this is the day right after. This may have been right after the tariff announcement. But 4/3 was also an interesting day in terms of FTDs on XRT. We had a massive number of FTDs over on XRT. So if we scroll down, let's see, we need to head over to FTDs. This was 1.2 or so million FTDs. So just to give you a quick peek here. Here it is, 1.12 million FTDs that were not able to be fully cleared on 4/4. So that's the highest number that we've seen in quite some time. I think maybe we had a day in March. It was close to that. Close, but not quite. That's the highest number of FTDs. Yeah, there it is, actually back in February, right? 1.42 million XRT FTDs, which is when we started really to slip down into that pretty deep cavern there, leading up to, let's see, leading up to earnings, that last month or so before earnings. So let's hop over here to our daily chart. Yeah, right here. So we had kind of stayed buoyant, right? We were clearing some of these FTDs here. We got this really big upward volatility, went up to 31.66, I think, after hours on the 13th. 14th had a precipitous kind of down day, and then we stabilized a bit into the 21st, and then following week, we just started our rundown even before we had anything close to sort of rumors about tariffs. So we just whoop, 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 and then we didn't move up until it was time for earnings. So, right, huge number of XRT FTDs right here. Huge number of XRT FTDs right here, right? So we had started to move up after the bond announcement. And then right here on this day, we gapped down on Thursday. This was the day following the tariff announcement, the Liberation Day announcement. We gapped down, massive number of FTDs, still a large number here on the 4th, and then we really started to cruise on up there. Okay, so right, and RC had his Ryan Cohen had his rainbow flag tweet there, which some pointed out, in fact, had this similarity to what was to this tweet that Roaring Kitty had back in 2021. So, right, I had sort of thought about this. We talked about this a little earlier, but it seemed to be potentially like this would be a suggestion that, all right, we're seeing these FTDs in early April. What does that typically mean, right? When are those cleared? What is sort of the effect of seeing a lot of these FTDs appear in early April or in late March? And the hypothesis there is, okay, well, these have to show up at some point, right? This is sort of like, Roaring Kitty's tweet more recently about something needing to have been dropped for you to pick it up, right? From the movie Tenet. And really, right, what the Rainbow Road tweet began this very interesting price action movement right here in 2021. So going from, we got this tweet right down here. We bottomed around March 25th. We were sitting right on top of, I guess, all of these moving averages, which was very interesting. But then, we went up and down just a little bit around sort of April. So we went up immediately after earnings, came down into mid-April, which I think Richard Newton certainly suggested that this was the positioning of a swap based on his bottom-to-bottom calculations. And I think there's something in line with that. But right, so we we really moved back up here, right? We had this kind of gap up day around May 26th. So we also had that type of day, right? Smaller magnitude, not quite as big as the price swings we were looking at here back in 2021, but we also had that type of day right around May 26th, so later May. And then we really didn't see price peak as well as a volatility peak until June 8th. So that's right over here. We can see, for example, that there was an initial intent to schedule the earnings, right? Wall Street was sort of in this position of saying, oh, it's going to be the 6th for months. Right, even though, we talked about this, I was like, it's not going to be the 6th. That doesn't make any sense. It's going to be 2 days before the annual meeting, just like it was last year. So we know the shareholder meeting is on the 12th, so earnings is going to be on the 10th. Why is everybody insisting it's going to be on the 6th? Excuse me, this doesn't make any sense. Unless this was meant to be the type of event that would be used as an excuse for an inflow, a very large inflow of volatility. Now, why would there be a very large influx of volatility around these dates? This is provisional, right? This is working, but a sort of working idea here. But I did take some time to take a look at what was going on with RIV, right? We can see we have this big inflow, right? Big inflow of IV that sort of peaks around these dates. And there's kind of a double peak and a single peak in offsetting years. So 2021, we had a single peak in June. 2023, single peak in June. Do we get another single peak type event here in June, right? And it's all around kind of this, the 8th, the 7th, right? We got something similar, very close to, right? So we had an IV peak on the 5th last year of June, but of course, price actually peaked in the pre-market on the 6th, right? Or on the 7th, just when Roaring Kitty had his live stream, even though IV was actually slightly higher a few days before that. It had started to move up. Right, we kind of have, but then we get these double peaks in these off years. So double peak here in 2022, and then a double peak here with, right, we can see these dates kind of line up quite a bit. Actually, this would have lined up pretty well with earnings had not Roaring Kitty scheduled his live stream or something early. Maybe, this would have lined up pretty well with earnings, right? If we kept going higher, but we had this offering was announced. Earnings had a surprise release on the 7th before Roaring Kitty's live stream. He may have anticipated that we were going to look maybe something like it was back in 2022. So maybe it happened a little early. Not sure there, but right, we have these types of these recurring volatility spikes that always occur, right? They sort of build up. We get this big buildup in sort of late April May into early June, and then we fall off once we actually get the earnings report. But like this, right? This doesn't really make any sense from an earnings perspective because Q1 earnings is boring. We don't report much. GameStop doesn't report usually groundbreaking information going into Q1 earnings. It's usually a disappointing quarter. It's GameStop's historically least profitable quarter. We've already had forward guidance from the previous earnings report. What is going on, right? What's bringing about this volatility? And one of the suggestions, of course, that we've talked about, right, back going into earnings this year, right, Richard was talking a lot about this. It was something that I was thinking about as well. I had been relying as well on data that was compiled by user MetroBall, which was extremely helpful to write some sort of pre-combed through data, which marked swap entry dates and swap expiry dates. And so we had a number of swap dates that directly from this data provided by MetroBall, and we were able to find had expiries throughout March of this year. Richard Newton, in particular, months in advance of actually looking at the expiries on these dates, did this sort of bottom to bottom 6 month 174 trading day sort of guess. Like, okay, we saw this bottom in this year. It seems like there are kind of these swap cycles that if we go out, they're sort of spaced out 6 months or 5 months or something like that. And he was able to predict bottoms within a few days by saying, it looks like there's a swap here, right? Did they move this down in order to price a swap? So then it was very interesting, of course, to have his hypothesis based on price action, and then to look at that data and then to line that up and say, hey, it looks like these things actually concur. This is the case, right? But of course, looking at that swap data that MetroBall had worked through, what we ended up seeing was that these were 2-year swaps. So Richard's, thought there was, are these 6-month swaps, or are these like multiple bundles of multi-year swaps? And it does look like it was the former of those two options with respect to what was in MetroBall's data, what MetroBall was able to look through. And it turned out that our March swaps, right? So back here are, or I should say, right back here, right, our March swaps, which would have been, right around here when we had this volatility. So our March swaps were dated all the way back here. So they were from 2023. And they themselves, especially the ones in early March, right? Actually, the later ones, actually, a few of them were 1-year swaps. Some of them are 1-year swaps, so they were from March of 24, and some of them were 2-year swaps. So they were from March of 2023. The ones that were from March of 2023, which were opened back in March of 2023, were themselves swaps that had originally been opened 2 years prior. These look to have been, we don't know for sure, but these look to have been the Billabong Credit Suisse swaps from 2021 that ended up spelling the demise of Archegos Capital, right? And one of the key themes there, of course, right, why was this so important for Credit Suisse? Why did this end up being, right, they were on the winning side of this trade? What's the issue here? And a part of this has to do with the hedging by prime brokers that typically goes into the opening of these swap positions. So, right, prime brokers, they don't really care, right? Ultimator 7's done a really excellent job walking through and sort of sketching out a pretty great graphic, a pretty good model of how this works. But right, prime brokers don't really care about benefiting from the swap itself as in terms of, say, the total return or difference in the equities of the swap. Typically, what they will do is, as a counterparty, let's say somebody enters into a short swap, they will enter into the long position, and they will hedge the underlying delta on the swap so that they can just collect a monthly premium, right? They can collect a regular payment, so they don't care. If it goes up, doesn't matter, they're hedged. Goes down, doesn't matter, they're hedged. They are just continually paid a premium. Well, what happens if your counterparty goes bankrupt in the process of you having your swap? Well, they can't actually pay out the other side of your position, right? They can't, that's part of the hedging equation. So you're just left with this, the swap goes away. There's no necessary payout. You don't get reimbursed for that. But now let's see, if you're the long party, that means you've got a massive short position that's there to hedge that swap. You've got to close that out. So it does seem that in this particular case, what's been hypothesized is that this short swap in particular needed to be closed, couldn't be closed out. So it was bundled up, kicked out several years. when it started to become due, something like that, Credit Suisse ended up being unable to manage that. And so this was acquired by UBS in 2023. And then this was potentially packaged, right, and moved out to this year. Well, it looks like, right, we started to move up just after this swap roll date. And then we got moved back down into the 1-year swaps on March 28th and March 31st. It's been hypothesized that maybe those swaps were closed, right? Maybe those swaps were closed as a result of this offering, or maybe something of the sort. But in any case, right, is there hedging? Were there hedges to these swaps then that needed to be closed? And of course, if you needed to hedge these, if you needed to close these hedges, you wouldn't necessarily go ahead and do it right away. You would go through this whole internalization process so that you would have the opportunity, as we've seen so many times, to build out options positions in order to take advantage of the volatility that would ensue from you going ahead and closing out your short swap on, or short hedge on your equity position, let's say. So, I mean, there's a lot of ifs, there's a lot of maybes, there's a lot of speculation here. But in any case, one thing that we do really frequently see in this period is we do see this volatility come onto the tape, right? We see this internalized buy pressure, and therefore, in terms of GameStop, internalized volatility emerge some manner of days later. So through the work of a lot of really excellent DD writers from earlier in the day, right, this can be more or less approximated to something like, Richard's been on top of this as well, T plus 33 trading days, which is something like T plus 6, then calendar plus 35, right? So T plus 6, FTD goes on the books, then there's C plus 35, and then a T plus 1 in order to deliver on that. That can boil down to something like T plus 33 days, maybe with exemptions or something is T plus 34, right? So give or take a day or give or take 2. But it does seem like there's something to this. So could it be that in particular on this particular cycle, right, there is this need to go ahead and clear out FTDs that have been sort of internalized over the course of the year, as well as clear the FTDs related to the closing of these swap hedges, that all sort of culminates in June. And of course, why would this occur in June? Well, toward the end of the month, right, the third business day from the end of June is the reweighting day of all funds, right, XRT, right, the favorite ETF of abuse when it comes to internalizing issues with GameStop, many of the other basket stocks as well. Right, reweighting, not just rebalancing, occurs on this particular day. So part of this is one thought, right? Part of what could explain why there is often a decision to go ahead and clear out a lot of FTDs or sort of multiple internalizations going into June is, number one, you get to use earnings as an excuse, right? So earnings is often used as an excuse for volatility. Then with respect, you want, so number one, you want that done, let's say, you want those cleared, not only before the reweighting period, but you want it cleared before quarterly OPEX, because quarterly OPEX is also rebalancing. So first off, you've got quarterly OPEX, you've got rebalancing at quarterly OPEX, so June 20th, and then the following week, you've got the reweighting of the ETF. So you want to make sure you get all that stuff kind of out of the way. If you've got something to clear that you've been internalizing, you want to get that out of the way so that you do not get caught needing to close something out, having something force closed out, let's say, whenever you have these particular events, so rebalancing and reweighting, which both happen in June for XRT in back-to-back weeks. So this does appear to be a pattern that's occurred, right? I mean, we even saw some of this going back even before the sneeze. But we do see something like this. So I'm not exactly sure, what pattern this will take this year, or exactly which of all of these elements are the most operative, right? There's still, a lot of work to figure all this out and be precise with this. But what I would say is that, these past years, it does look like that no matter what we're looking at, okay, we did get some volatility this week, really cool, right? Something looking like, 2023 or even 2021 to a certain extent here. We could see something very similar playing out over the next couple of weeks. So that would mean a return of more volatility. So yesterday, of course, we had this slump. Today, right, open. I haven't checked what we're looking at right now. Are we recovered? Yeah, we recovered a little bit here, but we started to head down to 30 some odd. Volatility clearly dropping off a bit. What are the implications here, right? What does this mean? We're just kind of done. That's it. We're finished. Wave the white flag. Like this is now we go into a down cycle. What I would say based on this understanding of these patterns is I'm not inclined to say that this volatility phase is over just yet. And a part of that also has to do with what we're seeing in our options data. So if we move down, right, we could look something like this, right, kind of go down here, maybe and test, we did kind of just did test a little above 30 here. So maybe we consolidate for a bit and then head back up, right, for another peak. And a lot of that has to do, like I said, with what we're seeing in the options data. Not a ton of activity in the short term yesterday, but what I would say is the most important from what I saw in our OI data was this huge call debit spread position did not move. So we still have all these contracts in place at 36. So these are the long contracts, and at 41. So this call debit spread did not move, despite the fact that it is now not profitable for the guy who opened it. He is down on that position, right? Remember, he also rolled the short leg of his position from 39 to 41, which costs some money. Some put buyers yesterday and the day before, I think, are pretty happy with how things are looking, right? They built out some put positions here. Not crazy, certainly not enough to overwhelm the very large amount of OI we have. Say, look, we can see just at 30, 32, 35, right? 36, obviously, 39, there's still quite a bit, 40, 41, right? And we can see if we go look at our gamma data, we also have max pain is at 30, right? If we look at our gamma data, we can see that by and large, kind of these large, very supportive brackets are still in place. Okay, so we got moved through some of these earlier, right, as a result of yesterday's price action, but 30 still in place and does look like, right, based on where we have our options concentrated, it does look like, right, once kind of we're hanging out down here, the path of least resistance is actually to just start going back up the other way, right? To wait for some sort of inkling, maybe something like we saw last year, right, with Rory Kitty dropping his position on June 3rd or something like that. No doubt that added some spice to what was going on, but there was likely also something going on underneath the hood as far as potential FTD clearing. So we could easily move back up here. We still have this structure in place. We also have this structure in place as we go forward. So here's next week, 6-6. What can we see? We still have this architecture of 30, 35, and 40 as these principal positions on our options hedging landscape. So right, we can expect to trade, right? We do kind of ramp up in here, right? This is a ramp where we have at the bottom here, we've got a base, very large supportive base that offers suggests resistance back to the upside, or support, which reversal, I should say, back to the upside. And then we have increasingly large net call gamma positions, which we know are net long based on our recent activity, up to about 35. So, to run at least from 30 up to 35 over this span of time does look like something that is definitely on the table. And right, as we continue to look at our gamma going forward, right, we have, okay, 6-6 looks good. 6-13, we also have this in place. We did see somebody go ahead and put a decent put position there. It's about 4,000 contracts. It's not a lot. It's at 2750. Somebody opened that last week, so before we had this huge volatility going into yesterday's trading. Somebody opened this last Friday, so that's surprisingly because of how what has happened to our IV. That position is only down about 20%. So, yeah, really not bad. But okay, keep that in mind, right? Somebody opened that with the expectation that following earnings, we might go ahead and dive through that $30 support, but it's still there. It's also still there heading into June OPEX, right? We still see this. We have 30 here. This is 35. Here's 40, and then there's actually a ton up at 50. But we still have this. We still have this bracket. We still have this framework. We don't have a lot below us. There is some, but we don't have a lot below us. So this suggests that basically heading up into June OPEX, we still have this 30, 35, 40 framework, basically suggesting where most of the action is going to be, right? Where traders are going to want the price, and where therefore positions are likely to distribute themselves in terms of volatility sales. So this position may not hold going into June OPEX or coming out if we don't see a redistribution of call gamma following that. But I would say that based on this structure right now, it does look like we are going to trade in this area. And if our understanding, right, if this concept, if this pattern that we've seen with volatility spikes going into Q1 earnings, right, going into that first and second week of June, continues, if we are indeed, especially on this one spike pattern that we saw in 2021 and 2023, we we may have another go at this, right? We may have another abrupt move to the upside, another volatility spike before we go ahead and settle into something of a down move. So volatility sales. So volatility will come up. We'll do these multiple pegs, and then the rug gets pulled. As if we don't have anything super material from the company, right? If we don't get any news that an offering, something like that reconfigures what we can expect going forward into the rest of Q2, then we might see that, right? Just like we saw last year, maybe we get this kind of aftershock of this excitement and this volatility, something like May OPEX tailwind into early July, and then we kind of move down into August. Maybe we see another thing in August too, but we'll cross that bridge when we come to it. We'll have to see how this ends up playing out over the next week. But especially from looking at options data, looking at these volatility cycles, I am not ready to say that I think that we would immediately and hardly come down, really strongly come down, until after we get kind of one more thrust back to the upside. Maybe it's not as high as this pre-market Bitcoin top, but I wouldn't be surprised to see an additional flow back up before the market as a whole, the options market as a whole, pivots into volatility sales and buying some puts on the expectation of reversal back to the downside into the later part of the summer. So that's my outlook here. I'm going to be continuing to think about this going forward. Of course, we can break down some more of these topics. Going at our live stream on Friday. Looking forward to seeing everybody there and talking about some of this in some more depth. But that's the outlook for today. Good luck out there, everybody, with your trades. Thanks as always for watching and listening, and we will see you tomorrow, not only for our next open interest newsletter breakdown, but for our live stream. So thanks, everybody. Take care.